Thank you so much for those joining us. This is the inaugural State of Africa, the State of Africa Summit, which is basically looking at the State of Africa post the pandemic in terms of investments, in terms of trade, in terms of aviation, sports, and the creative industries. Our next session is basically looking at African investments now and post the pandemic. Of course, with the pandemic, there's so much that has happened in terms of investments. A lot of things have been on hold, but also we understand in the past, Africa has attracted so much foreign direct investments. But is it time for the continent to look inside itself and see if we can now focus on intra-Africa investments? All of this is what we're going to be exploring with our experts, honorable ministers on the panel. But in the interest of time, I'd like to kick the session off by inviting our moderator for the day, Dr. Dennis Matanda, to kick off the session.
Thank you very much, Maggie. This is such a great session because the session before was almost like a beautiful build-up to the kind of panel that we are going to be having now. In the earlier panel, we talked about trade, we talked about intra-African trade, we talked about partnerships with various partners. This panel is going to solidify, I believe, the message to the continent and to the rest of the world. It is such a pleasure for me to be in this position because not only do we have people who have the wherewithal to almost signal the rest of the world with the sort of message that we can talk about a positive Africa, even in these dark times. We also have a panel that has the money, the wherewithal, the access to the people, and the example. I know that our colleagues from Rwanda are here. Louise, it's so good to see you after so long. But let me just go back to the introduction. I am in a very good place right now because my boss is on the phone. I was actually on the call right now. Mr. Mansa Media is an international banker. He has specialized in trade and development. He's currently president and chief executive of the Eastern and Southern African Trade and Development Bank. Our headquarters are in Nairobi, not in Nairobi, in Burundi and Mauritius. And we sit in Nairobi, and I'm just really happy to be here with my boss because not only have we had conversations about this, we are really excited about intermediating regional and global capital. So for me, the message is going to be really, really key to go to the next level. I'm also joined by Zemedena Negatu. I do not know how much I can say about you, Mr. Negatu, but you have inspired millions of Africans, millions of people around the world, not only with your capacity to clearly demonstrate Africa's place in the world, but you have been something that Mr. Tadesse talks about. You have been a global citizen. From that perspective, it would be such a pleasure to hear your perspective and to hear what Fairfax actually has to say to the rest of the world in terms of basically in terms of investment, talking about some of those things that you talked about 2 days ago, the Bloomberg aspect. Related to that, I am so happy to see my friend Louise Kanyonga again. It is a long time since I last saw you at the RDB. It must have been 4 or 5 years ago. It is so great that you are in this great position as the lead strategist for the Rwanda Development Board. Not only is the Rwanda Development Board tasked with generating investments for the country, what you have also managed to do is to provide a one-stop shop for investment, perhaps giving every other African country the opportunity to see what could happen. This panel for me is quite important. So I would like to kick it off with Mr. Tadesse to talk about the kind of signals the bank or the region can send in this post-COVID situation. Thank you. Sorry, Mr. Tadesse, did you hear me?
Yes, I hope you can hear me.
Very well, sir. Yes, sir.
Yeah. Well, great, Dennis. I had the privilege of listening in on the earlier panel, and as you say, it did set the stage very nicely. We had eminent thought leaders who said a lot about the context of African growth and development, and I think trade was the main theme, and now we're talking about investment. And I think everybody knows that the two engines of growth are trade and investment. So a very interesting remark was made about a car having a great engine, but needing lubricants in order to move, right, in the previous session. I think what we're going to be talking about is making sure that the car has roads to travel on, because you can have a great engine and it could be very well lubricated, but without roads, you can't go very far. And I think a critical part of the investment discussion will be infrastructure alongside industry and agriculture as well. And again, a lot was said in the previous session about agro-processing and adding value to our natural resources, our commodities. I think the investment agenda is going to be very much a question of value addition for Africa. And if one were to just stand back and look at the one particular variable, capital, flows of capital coming into Africa over the past 20 years, there was a sea change. There was actually a transformation in the movement of capital. And I don't think the rest of the world realizes how dramatic that shift has been. And I think despite COVID, what we are still seeing is fairly strong flows coming in. It's much reduced, of course. 2020 is going to be 25 to 40% down on 2019 in terms of fixed capital, foreign direct investment in particular. But I think what's going to happen is what we saw with the commodity crash about 4 or 5 years ago. There was a big downturn, but then a year or two later, it came back up again. The same thing happened during the financial crisis in 2008-9. You know, again, there was a very sharp decline, but then it bounced back again. Of course, the Build Back Better agenda will show us a different kind of bounce. It may not be the same as the previous ones, but clearly the world is moving back to some kind of normal. And I think all we have to do is look at the two particular flows, remittances and fixed direct investment. Those two flows have been double ODA for almost a decade running. And if you went back 15 years ago, that wouldn't be the case. And that's really when this historic transformation in Africa's growth story began. It's actually been going on for almost 2 decades now. And I think if you just were to look at a 3-year moving average of fixed capital formation, Africa's fixed capital formation rates have been almost catching up with Asia. It's 1 or 2% level growth below Asia's year-on-year growth in terms of that variable. So just from the investment theme of this particular discussion, the one thing to look at is capital. Now, of course, the other thing to look at is the efficiency of the capital, the productivity of the capital. And their infrastructure is very key. And again, I always like to highlight to international observers of African growth, if you went back 15 years ago and told the world that there was a telecoms revolution happening in Africa and it was going to be driven by private money, and telecoms investments were going to be the most profitable in the whole infrastructure asset class space, most people wouldn't believe you, right? And so many of us, of course, have ridden that wave. And we've also seen the banking sector move dramatically in the same way over the past 15 years. Banking asset class has been also extremely successful. And the same thing with some areas of innovation and technology like M-Pesa. And so now what is happening is the experience from those sectors and those asset classes is moving into other sectors such as power, energy, which has been, of course, trailing behind the others over the previous decade or so. And we are seeing huge investments coming through the transport sector. Just look at rail, standard gauge rail. You know, there's been at least $20 billion of investment in rail across East Africa, Ethiopia, Kenya, Tanzania. And this rail will interconnect another 5, 6 countries. You're talking about 10 countries that are going to be interconnected to seaports through modern standard gauge rail, which will make it very efficient to move goods and which will address that pressing issue that Carlos Lopez spoke about the inefficiency of Africa's movement of goods. If you look at the unit prices of African factory production, typically it's competitive with Asia and elsewhere. It's the minute the goods leave the factory gate that the inefficiencies just start to mount. And by the time you're hitting markets, you're no longer competitive. And so I think some of these new and massive areas of investment will begin to change the landscape and make Africa still a very compelling investment destination. For those who don't know, the average return on investment in Africa has been roughly 11.5% for well over a decade. The corresponding figure for other developing regions is around 9%. The global average is 7%. So from an incentive perspective, it pays to invest in Africa. Africa has actually got one of the best returns in the world. Even if you were to adjust it for risk, it still comes out quite attractive. I'll stop.
Mr. Tedesse, I was actually going to come back to the question on risk, and we'll bring this back after I speak to Louise and Mr. Nagatu. But Mr. Nagatu, from that perspective, I would like to ask, how do you speak to your former classmates at Harvard? How do you speak to them? How do you speak to them about the opportunities that you've seen on the various boards that you sit on right now? How do you describe this opportunity and this challenge that is supposedly Africa vis-a-vis COVID-19?
Right. First of all, thank you for having me. It's a pleasure to be back on. The theme of why is Africa not fully realizing its potential is something we discuss endlessly. So what I want to do is speak in practical terms. So I'm today, for example, I'm in Washington, right? So there's plenty of capital in the United States and around the world, actually. Money that is just sitting in negative interest rate accounts. So I'm going to link that to Africa. Essentially what it means is there's trillions of dollars, pension funds, other institutions that decided that they would rather pay their bank to hold on to their cash than deploy it in Africa. So we have to ask why. So in the business that we're in, which is investments and actually deploying capital, but as well as advisory on the investment banking side, the common message or input feedback you get from investors is Africa is too risky for me to put my money there. Okay, now there are two aspects to that. One is the real risk, of course, but most importantly for people like me, the frustrating part is the perceived risk. In many instances, the perceived risk far outweighs the real risks. Okay, so one of the things that needs to be done is risk. People actually say there's tons of money sitting there doing nothing. So as Africans, or as as someone who is trying to get money into Africa, my message is let's address the real risks, which cannot be discounted. I mean, I can check them off. People usually, and before you look to deploy capital, there's both a mental checklist and there's a long retail checklist, in some cases hundreds of pages, right? Of what we call a due diligence checklist. So it starts from the macro. So I'm going to talk about the real risk. The macro risk, what are they? Political stability, the rule of law, safety. I mean, there's no way you can convince anyone, I don't care if the IRR is at 50 or 100%, you cannot convince anyone to put a penny into any country if you can't pass that test. Okay. So these are real risks. Now, so we start with that. Then you go to the rule of law. Do we have the rule of law or the rule of man? Again, these are real risks. People want to know if their investment is protected. Then you go down and you say, okay, what is the business operating environment like? This is before you even get to a project or an investment that is being pitched to you. So what is the business operating? Is it friendly? Is it welcoming of private investment, private capital? Because remember, the people who actually deploy this money, they have fiduciary responsibilities. Unless you are an enormously wealthy individual who doesn't care or who's willing to give it away, and there are very few of them who do that, every single person who is being asked to invest in Africa, every corporate CEO who is being asked to invest in Africa has a fiduciary responsibility. It could be to his shareholders, if he's a CEO of a listed company, or if it's a pension fund, it's the people who've been contributing to that pension fund who are expecting the administrator of the pension fund to protect them. So there is a reason why they ask these questions. Okay, so the operating environment, is it welcoming? Can we get our money out if we need to? Can we sell it? Can we? So the operating. Once you pass what I call these macro tests, and these are real risks, then you can start talking about the project level detail. To me, that is detail. I just don't think those are deal breakers unless the due diligence discovers issues that the IRR, the return investment you're expecting. These are the real risks, right? Now let's come to perceived risks. So when I used to be a managing partner at Ernst & Young, and every year the firm used to put out this really beautiful report that I used to help participate in the drafting of it. So we used to survey investors, both onshore in Africa, who've already invested in Africa, and offshore. Okay, those who haven't done anything, but they hear about Africa from the media and other things. What we found, and this happened repeatedly over the years that these reports have come out, is those who've actually invested in Africa have a more risk perception than those offshore. In other words, those who are doing business in Africa feel like it's less riskier to do business there, and they'll continue to do business there. The others have a diametrically opposed view of Africa. This is what I've called the perception risk. So we need to work on that along with the real risk if we're going to pull in investors, private capital. Okay, so these are just some of the key messages that I would like to, as an introduction, that we as Africans, because earlier discussed, and even in the prep session we had the other day, I mentioned to you the FDI figures in Africa. I think I must also mention it. First of all, we receive less than 5, as Africa, Africa receives less than 5% of FDI. I mean, these are the reasons why. And now this year, of course, is going to be even substantial. On the private equity side, the same thing. Already we were getting that much, but at least it was doing okay. Now that's been cut back substantially this year. It's understandable because you mentioned COVID. I think the whole world is holding on to what it has. It's trying to protect its investment. But we need to think post-COVID, how do we bring in private capital when there is no shortage of capital? I think that should be hopefully the frame of the discussion that we're having today.
What's interesting is that we're going to be joined quite soon by Honorable Hott, the Minister of Economic Affairs in Senegal. But right now we have Louise Kanyonga from the Rwanda Development Board. Louise, I asked Mr. Nagatu a question on how he was going to address his colleagues, his former classmates at Harvard. Let me now ask you, forgetting the fact that your classmates or your former classmates at Harvard probably had, or you probably speak to them on a regular basis. But we also have to admit that Rwanda is punching way above its weight. And this is a very positive thing in terms of generating investments. Some of the signals that have come from Rwanda have basically been channeled out of the Rwanda Development Board. What are some of these things that you would like to almost signal to the rest of the world to say, you know, if Rwanda is doing quite as well as it is in terms of FDI, what can other countries do, and what can other investors look for in terms of messaging to basically churn their capital to the region?
Thank you, Dennis. I hope you can hear me.
Very well.
Great. Good afternoon from Kigali. Good to connect with you here again, Dennis. It's been a while indeed. Good to see you. You're looking well. Very, very excited to be joining this conversation, and really want to join my colleagues in thanking everyone that put together this very important virtual conference. I too was able to join in earlier and had some of the very interesting insights coming out of that, very many of which resonate with what we are trying to pursue as a country. Dennis, to your question, I think all of us have really been, so to speak, forced back to the drawing board in a sense, because of the global disruption that COVID-19 has been. And for countries like Rwanda and pretty much the rest of the continent, it was really very unfortunate because it sort of coincided with a time at which we were seeing unprecedented growth rates. Rwanda, for example, had grown at 9.4% in 2019, which was probably one of the highest in the world, and we were even poised to grow even more, in the coming year. This was the highest that we'd been able to grow in a decade. So a very unfortunate coincidence, but we've really looked at this as something that has presented a silver lining as well. I think, as you said, Rwanda has, we've put in place several structural policies over the last couple of decades or so to really transform the economy. But what the pandemic has done is really push us to rapidly adapt and fast track some of those plans. And so even as we look to what Rwanda has been able to achieve, we're also really reinventing, reimagining, innovating what it is that we can do as an African country to look to how we can come out of this strong or even stronger. And for us, really building on what we already know as Rwanda, I think we've done a lot to position the country as a destination that you can come to, and it is extremely easy for you to transact. We've put in place the right enabling environment for you to be able to, to do business in Rwanda. A lot of that driven by very sound governance, by very stable macroeconomic fundamentals, but also innovation, right? Really looking at how do we put in place a government that is efficient, that keeps up the pace of, growth and innovation in the private sector, and seeing how, we're able to be, if possible, a couple of ahead of the private sector. Now, with the pandemic, there's really three key, I think, dimensions that we're looking at moving forward that, that draw from our experience as Rwanda, but I think are also very relevant to the rest of the continent. The first is something that I hinted on, which is obviously agility. Yeah. We're having to move forward really fast.
So that's agility.
Absolutely, yes.
Okay,
agility.
Okay.
Yeah. And if you look at how Rwanda has responded to the pandemic, both from an economic front and even from a social public health front, we've been really quick with the decisions that we've made. We've had to move quickly. We're probably one of the first countries to impose lockdowns. We had to put in place fiscal measures very quickly to ease pressure on business. We had to put, I think fortunately for us, we had built several key infrastructural, we had several key infrastructure investments in place, like ICT. So we're able to quickly transition many of the services that government offers. We're able to quickly transition towards digital payment, systems. Many companies were also able to, take advantage of all those investments to move very quickly. So agility and being able to respond with, nobody knows how this is going to play out for investments. We keep on revising our projections. So no one knows how this is going to play out, and we have to continue to be agile and very innovative in the way that we do this. I think Rwanda always tries to come up with unique solutions that are very Rwanda-centric, very Rwanda-tailored, and that's something that we really want to continue doing and that we think would be relevant to Africa. The other one is adaptability. We were remarkably impressed by our private sector. They demonstrated incredible innovation in adapting to the new normal. And that's something that is going to have to be very important as we're, going forward, both for the private sector and for government. We've seen how e-commerce quickly organized itself within hours of us, imposing a national lockdown. Businesses were looking at new ways of bringing their goods and services to their clients. We had, several e-commerce platforms that mushroomed overnight, delivery services being quickly organized. That really shows you the vast and untapped potential that we have. We saw a similar sort of response in terms of our capacity as, to fund domestic manufacturing. Before the pandemic, we were a net importer of personal protective equipment. So anything from masks, sanitizers, etc. And now we're completely self-reliant, right? Completely able to manufacture for the local market, which shows that there is a lot of potential in other areas. And so what we've done is actually come up with a very structured framework to identify these areas within within the economy where we have a huge potential for domestic manufacture, domestic production, and look at how we can start to build those capabilities in the country. Another, I think, interesting case example for us in terms of adaptability was tourism. I think we all know that tourism was one of the hardest, hit sectors globally. No different from Rwanda. Yeah, absolutely. A complete loss of revenue. Revenue is down by 100%, and so we had to quickly devise strategies to tap into our domestic market, and that's something we have to continue doing. Looking at how do we come up with the right kind of packages or the right kind of infrastructure? How do we partner with the players on the ground to start to appeal to the domestic market as we gradually build ourselves, out of it? As you know, Rwanda is, positioned itself as a high-end destination, which doesn't typically resonate with domestic, spending power. And so we had to bring the private sector to the table with us, challenge them to look at the new normal that we're dealing with and see how they can come up with, something that appeals to the domestic market. And we've seen tremendous impact from tapping into our domestic market. Now, going forward, the last thing is resilience, and looking at how countries like Rwanda and on the rest of the continent, how we build resilient economies that will not only withstand, but actually thrive, in the aftermath of this. And so for us, and I think several countries have done this, we have a very clearly elaborated recovery plan that covers from mid this year until the end of next year, looking at very specific interventions across the different sectors that we believe will drive growth, and coming up with targeted interventions around those. We also have an economic recovery fund that is really going to ensure that we continue bringing capital, to the sectors that must drive growth, but also the sectors that have really been hit hard. I think, it's been mentioned by the panelists spoke before me, the need to make sure that we're really channeling capital to the right places, and to the sectors in which we really see potential to drive growth. For RDB, obviously, as you said, our core focus is always going to be looking at how we continue to drive investments and tourism to the right places. We've always looked at a very targeted approach, looking at investments that have a very clear value proposition for Rwanda. The pandemic has forced us to even be a lot more strategic and a lot more targeted in our approach. And so we've really, looked hard to what are the niche sectors that Rwanda has, a right to play and a right to win, where we have a competitive edge, and where we really see the ability to drive growth through creating the right type of jobs, through creating an ecosystem, and so on. And also narrowing down beyond those niche sectors to actual investment projects that are flagship, that can really drive and sort of rally growth behind them.
Interestingly, Louise, and I don't mean to interrupt, I apologize for interrupting. What I was actually going to do was to ask if there were any specific asks that you as the Republic of Rwanda would have to people like Mr. Tedese here and Mr. Nagato, because we have people who could actually respond to some of your needs. So let me just channel what I think I heard you talk about. You talked about adaptability. You talked about agility. You talked about resilience. Interestingly, these are some of the things that Mr. Tedese drums upon many of us at the bank. Mr. Tedese, let me just switch around. Rwanda is a member country of the Trade and Development Bank. From that perspective, we have opportunities sitting in Rwanda. We have invested in Rwanda Air. We have actually done, I was able to go to the Shubi T, which is about 200 kilometers south of Kigali. From that perspective, how can we infuse the system? How can we be the ideal voice for the region, the ideal integration intermediary for capital, leveraging what Mr. Nagato talked about, leveraging the opportunities he talked about, and of course, leveraging some of the things we heard from the panel before, and the things I want to take away were government and governance from those two aspects, sir.
Well, let me just come in with an interconnect between both Claire and Zemadina. Yeah. I think Claire talked about creating an investment destination in Rwanda that would obviously be attractive, and that attractiveness depends on an ecosystem clearly. And what is that ecosystem? That ecosystem, a big part of it is infrastructure, the hard part. Of course, there is a soft part as well, which is getting government to work, getting the institutional framework right. I think Rwanda is quite renowned in terms of being very disciplined in that regard. But Rwanda, of course, does rely on the region to help it get the infrastructure in place, at least the infrastructure that is not of an aviation nature. So when I talked about the standard gauge railways that are being developed now in the region, Rwanda will be one of the countries that will be connected to the ports in Tanzania. And that will really enhance the efficiency and the value add opportunities that Rwanda has with its various industrialization activities. Because Rwanda, of course, has a huge opportunity to attract investments and actually export it around Rwanda, because so much is right in Rwanda. So I think the private equity investors like Zamadina, when he comes in to assess the feasibility and the attractiveness of Rwanda, he's going to look at all of these other aspects. And already what we are doing is we're throwing our shoulder behind these big infrastructural investments in Tanzania and Kenya and others that will create multiple pathways for industry to become much more interesting in Rwanda. And then there's power, right? So power is another part of it. You can get the logistics right, but if you don't have affordable power, nobody's going to want to put up a factory in your country because it's such a base competitive issue. And we've been investing quite heavily in the power sector as well in Rwanda. They have a number of very interesting independent power producing projects, a number of private investors, such as the ones that Zamadina represents, have come to the party in Rwanda. And what we've done is we've followed investors who've come in with equity, and we've thrown our debt behind them and put the tenor behind our debt so that these equity investors also realize that there are partners on the debt side who can help them go the distance. So there's a lot that's been underway. And I think now it's just a question of making sure that we can all survive this difficult short term. Because tourism is another sector we've invested in Rwanda, a number of hotels we've invested in. And of course, Rwanda has built business tourism as a major form of tourism. And of course, we know that type of tourism is really slowed down, and that's a stress for hotels across the region, whether it's leisure or business tourism, it's all badly hit. And of course, this is where investors expect, long-term partners like TDB to listen and to understand what's going on in that short-term period and give a little bit of breathing room, right? And try to be reasonable together with other financiers around the world who realize that you can't change some realities, and you need to work with your partners to come out of this very difficult period. So 6 months, 9 months in some cases, we've been giving breathing room to various clients so that at least they can work themselves through this difficult period.
Talking about breathing room, I'd like to just draw the conversation to the previous panel. Many of the panelists talked about the relationship between the AfCFTA and the actual elements of trade and investment. But one of the messages that just didn't get out of my system was something that you, Mr. Tedesse, talked about, the overall elements on infrastructure. And then there's something that you, Mr. Negatu, talked about, the aspects of perception. And now that we have Ms. Kanyonga, Louise Kanyonga, she just basically talked about what the governments are doing. How do we put all these things together into some sort of package to ensure that we are signaling to the markets that, yes, there's some issues in the continent, but there's some satellite regions like Senegal, which we shall be meeting very soon, like Rwanda, like Kenya, like Mauritius. How do we signal? How do we package these things? And I want to throw this to you, Mr. Negatu, very quickly, and then I'd like to throw it back to Ms. Kanyonga and then to Mr. Tedesse. Over to you, sir. Mr. Negatu?
Sure. So in terms of infrastructure in particular, where there's a huge gap between what is needed to transform Africa into, let's call it an Asian tiger economy, and what is being deployed. I think, I know at Masus Bank and your bank has been investing heavily in that. And if few others are doing, but the numbers that we see are large. The funding projects, a lot of them are now being done through PPPs, public-private partnerships. So show some success stories to build confidence. Now, the challenge in Africa is there's such a diverse continent. It's always difficult for us to talk about one homogeneous place, but pick examples in countries where this has worked, try to replicate that and show that to investors so that they are actually saying, you know what, it worked there. Is this country that is attracting, inviting us to come in and do in their country, are they willing to replicate that model? Yeah, granted, each country has its unique issues or unique features, but with some modifications, are you, country X, willing to adapt to what made this project successful in this country where we had invested? I mean, that then helps build confidence. The other thing is pick on infrastructure projects that actually can show or actually have a higher rate of success if managed well than the really difficult ones. Energy is an easy one, honestly speaking. I mean, if the laws and regulations are there, as I said, there's no lack of funding. So what you have to do is make it presented, make it look pretty, so that show one big energy project that has return for investors, and others will follow. I mean, there's a herd mentality amongst investors. A lot of investors are lazy anyway. They just want to know who's done well, okay? They don't want to be the pioneers to either get burned and all that. So that's just one solution. But I would focus on energy. Now, there are some unique cases where we can say, for example, I'm originally from Ethiopia. So we have a tendency to use Ethiopia as an example in areas that has started to show some success. Early days, but still. So if you look at the industrial park strategy of Ethiopia, which is a big infrastructure project, they're like, the government has built, I believe, 12 or 14 of them. They're very focused. They really are really focused. Extremely impressive on how they've been able to roll it out in a relatively short period of time. So I think most of the industrial parks are now full, even though the first one was inaugurated only 3 years ago. So today you have industrial parks by sectors, agro-processing, pharmaceuticals, clothing, which is an industry that I know very well. So if you show successes like that, others will follow. And I think that would be the message, because investors want to be able to say to their stakeholders, I've deployed your money the right way. I'm bringing in the returns. And here's an example. Otherwise, you will have only a few countries who already, by the way, there's a creation of FDI into just a handful of countries. If you look at the UNCTAD report from last year or the year before, and you guys have the numbers there, if you look at the top 5 recipients of FDI, I think they account for like 60% of all of the FDI in Africa. That's unfair for the continent because we need this to be dispersed throughout the continent. So one way to do that is showing examples. And the other thing is, especially on infrastructure, try to make them as much as possible regional projects. I mean, again, I'll go back to the Ethiopian example. The largest hydroelectric power dam on the continent, the Grand Ethiopian Renaissance Dam, is not just for Ethiopia. It's for the whole region, for East Africa and for North Africa. That way, if an investor, not on GERD, but in other types of projects like that, if they were structured as regional projects, it will help de-risk for the investor that so that they can come in and say, you know what, I get revenue from multiple countries, right? So I would suggest you do that. The other, and just the concluding thought is, it's probably good to get investors from multiple regions, let's call it. I think at the moment, there's heavy reliance on China. And it's perfectly fine. I mean, the Chinese have been willing to come in, had the ability and also to execute on these large scale projects. But my sense is it would be for Africa, broaden the base, meaning why not appeal to American investors? Now, there are issues with US investors. We know that about why they don't want to go to Africa. But I think it's better for Africa to pull out of just one primary source for infrastructure investment and pull in Western investors. There's a lot of wealth accumulated in the Western world that would love to be deployed, but we just as Africans have not been able to tap into that. So this is just sort of a little summary.
I'm a little surprised. I know that it was couched in much of what you said, Mr. Negatu. But if corporate governance is the single most non-financial metric that investors leverage or use to actually infuse their funds into a particular country or region, and now talking about American investors specifically, I would have thought that we would start with that. And let me just pivot to Louise Kanyonga. Louise, I know that RDB is a government entity, and we really cannot leverage or point to corporate governance, that RDB's corporate governance or Rwanda's corporate governance, essentially. But what are some of the non-financial aspects that investors have been looking forward to? I know you talked about your overall elements of the country, some of the governance issues, and this is what you had started to talk about before I cut you short. I would like to continue with that essence. In other words, what are some of the most important matrices that investors are looking for to do business with you?
Thank you very much, Dennis. And that's I think that's a question that we spend a lot of time as RDB, thinking about. And as Negatu was speaking, especially about things around perceived risk versus real risk, and what African countries can do about that. I think, to be honest, there's a lot that we all know. As African countries, we all know what some of the fundamentals are. We know, what investors are looking for. I think the key differentiator always comes down to the ability to follow through and implement, on some of these things. But for Rwanda specifically, I think the starting point for us was really the question that you're asking, which is educating ourselves on, what are some of the things that investors are looking at and how are we performing on, along those things. And we found that, there is so many benchmarking sort of tools and resources out there. One of the most important for us, and I think that really started this trajectory for Rwanda, was the World Bank Ease of Doing Business, index, for instance. That is one thing that investors look to. We've seen it gained a lot of popularity as a report, despite the recent issues around that. But what it did for us as a country was really give us a clear benchmark on some of the things that we needed to do to make it easy to do business in Rwanda, to transform the business environment, which is a key fundamental for anyone who is looking to where to move their capital. And it does really give you an end-to-end approach from what do I need to start my business, and all the way to, if I do need to shut down operations, how is that entire chain, made very easy. So the business environment, I mean, we cannot underscore, we cannot overemphasize how important it is to have a very well-oiled, very smooth, environment where you're really constantly looking at how do we streamline costs for doing business, how do we streamline, procedures, but mostly how do we innovate and use automation and ICT to make it easy for you to do business. We've also seen that having a government that is very close to business, that is constantly willing to engage with the private sector and to adapt to what the private, because the business investment, it's a very dynamic, it's very dynamic. There's always something new that is emerging, or there's always issues that are coming up that you might not have foreseen before. So being a government that is very close to the private sector, willing to engage them proactively to understand what are the challenges, and then sort of aligning that, like I said, with the adaptability to quickly respond to those issues, but also the flexibility to be able to tailor interventions depending on, be it the sector. So if we're looking at infrastructure, understanding what are the challenges there. Is it a sector-wide issue, or is it a strategic investor issue? And then tailoring your interventions very targeted to that. So a government that is constantly listening to the private sector, constantly engaging, and being able to align that with the ability to actually make change, and put in place continued, interventions that will help the private sector. We've been doing this journey for 20 years now. 20 years of listening to the private sector and reforming. I can assure you, Dennis, it's a never-ending process.
I was going to make a comment on that.
Yes,
you know, part of the
never ending.
conversation we had about 8 years ago, Louise, was, and it's something that you've actually teed up for Mr. Tadesse, talking about oil and the overall lubrication of the system and the government and the never-ending journey around corporate governance. And Louise, again, I'm going to come back to you in a second, but you've just prompted a very good thought. Mr. Tadesse, you have been consistently talking about the governance potential, the potential to promote investment via governance. Louise, we've talked about this for donkey's years. Mr. Nagatu, we talked about this on the flight to Washington. The essence here, Mr. Tadesse, is how do you, and if you were to signal the rest of the world in terms of the governance aspects of the continent, the non-financial matrices, the governance elements, just taking an example of Rwanda and Senegal, how would you encapsulate the 22 countries that you currently serve as an investment destination, but sort of the potential for the region and how this cycle of goodness could actually spread?
Well, again, I'm gonna depart from where Louise left off, because I think this issue of communication, engagement, and fundamentally experience management is everything. Especially when you come out of a backdrop where there's strong stereotypes that are still attached to our reality. And I think the perception issue that Zamadina mentioned has to do with stereotypes. And that's why I love to point out a couple of sectors of our economies that have gone through revolutions over the past 15, 20 years. It's not as well understood outside of African business circles how tremendously successful telecoms has been. And not through public infrastructure, not government borrowing. It's been private sector led, and it's been a spectacular success for almost 2 decades. And it's not just about good returns, it's about amazing access to ordinary people. So it's really bottom of the pyramid type of impact in addition to excellent business. And I think, you know, as we start promoting the good news about Africa, including through forums like this that BBC kindly is organizing, we know that good news doesn't travel as well as bad news. And we know what the headlines always historically have preferred, right? So I think we need to put the Rwandas out there, the Mauritiuses out there, but also beyond these 2 countries that have always been stars in these various indices on countries that have been scaling these global, you know, surveys around countries that are doing everything right, institutionally, ecosystem-wide. I think even just standing back and saying, let alone these star performers, the continent as a whole has had a historic shift in terms of very, very attractive opportunities that have been realized. And I'm not talking about extractive industries and oil and the like that Zamadina was right to highlight as being conventional, extractive. You can do that without really dealing much with Africa, right? You can have enclave investments and still generate your returns. The question is, can you be in Africa, dealing with Africa, and still getting out with a good return, managing your risk? And we have a number of sectors that have proven that. Banking is another one. Not everybody understands how successful commercial banking has been in Africa over the past 15 to 20 years. And it's actually happened on the back of very, very successful macroeconomic reforms that took place during the same period. Anybody who knows banking will know it depends very much on macroeconomic fundamentals in terms of at least having stability, managing inflation, having decent economic policies. And there's been tremendous success in that sector. I think in the previous panel, there was references to EcoBank. EcoBank is probably one of 100 of very successful banks. Not all at the same scale as EcoBank, but clearly many. And I think when I refer to that special return number, the average return on investment of Africa being around 11.5% over a long run period, you know, TDB ourselves, we've achieved 12% return on investment over the past 15 years. And it's been a great run for us. And on the back of that success, we've managed to go out and raise institutional investors. But here's the interesting thing. I've always loved going on roadshows to New York, to London, to Zurich, to Frankfurt, telling the world that I've already got African investors, the pension funds that people have referred to in this discussion. I've got 4 or 5 pension funds in my shareholding at the moment. I've got insurance companies, and these are African institutional investors who've come in and who've benefited from this great run. They've doubled their investments in 4 to 5 years. And when we go to the Europeans and we go to the Asians and the folks in the Gulf, and we actually cite these statistics. And this is reality. It's not just, obviously a value proposition. And so for us, I think the lesson has been, really what Louise has highlighted. You really can't assume people know, especially because African news and the African story is not well known beyond certain circles in Africa. We need to do it again and again and again, as Coca-Cola would tell us.
I actually wanted to say something while you're talking. Sometimes when you listen to people like Louise, people like Mr. Negatu, Mr. Tadesse, there are so many things that I want to point out, but I have lots and lots of questions from colleagues that came from panels. I have a question here that has been hitting up very many people. Luckily for me, many of all our panelists actually understand the Marshall Aid Plan from the post-Second World War. So I have a question. As investors and all that, what would you say about a Marshall Aid Plan for Sub-Saharan Africa or for Northern Africa? Let me start with you, Mr. Negatu, very quickly, then I'll go to Mr. Tadesse and then come to Louise. We have also been joined by Mr. Amadou Hott from Senegal, but we will come back to him in a second. Negatu, over to you.
First of all, I think the name should be different. The Marshall Plan refers to a world that no longer exists in 1945 yes. and so on. So,
yes,
but
yes.
From that aside, I think let's be real. Aid, by definition, is not bad. Okay, I mean, if deployed right, it could be productive. So we should talk about the specifics of the aid, how it's structured, who's going to benefit from it, as opposed to does Africa need whatever we call a Marshall Plan or not. It would be great if the US, I mean, this where I am is the wealthiest country on earth. It has plenty to deploy, not as sort of charity, but it's in its own self-interest. The reason I say that is there's an unmistakable gradual shift of economic power from west to east. This is clear. We have data I saw a while ago, it's been a couple of 3 years, but I think the trend is the same. Today, Africa accounts for only 4% of global GDP. There's a forecast that says by 2050, it will be 12%, 3x. And compared to that, the United States today accounts for 22% of global GDP. In that same period, it will be 11%, half as much. Now, it doesn't mean that the Americans that are here with me today, we won't be driving tiny little tuk-tuks, or we won't be living in some poor houses. It just means, relatively speaking, the American influence in the world will be, as measured by GDP, half of what it is today. So when we talk about a Marshall Plan, it's not to just be sort of an NGO giving away money to Africa. It's in reality of where the world is going. And then I add one layer. By 2050, Asia will account for more than half of global GDP. Okay, anchored, of course, by China. So if this is the reality, and we see it already, even with COVID, China has recovered much, much faster. We're actually here in the United States in a recession, deep recession, with tens of millions of Americans out of a job. So if this is the reality, then shouldn't the West, anchored by the United States, be looking at that kind of Marshall Plan in its own enlightened self-interest to engage a continent that will be weighted 3 times more than it is today? And that's, I think, what we should be debating, as opposed to should the US or the West be marshalling a Marshall Plan. The substance and why it should be done is my key focus, because, as I said, there's plenty of private capital. And as you just saw, from March onwards, the United States has spent $6 trillion. 6 trillions, not B. They don't talk about B anymore, billions anymore. They talk in trillions. If it was able to marshal 6 trillion, 3 from the Congress, 3 from the Federal Reserve, the easing of monetary, that means the capacity is there. What we're talking about is not trillions for Africa, hundreds of billions, maybe $1 trillion over the next 5-7 years, in the interest of sustaining American and Western engagement with Africa, a continent that's on the rise. I think that should be the debate, the focus of the debate.
So let me just pivot away from the Marshall Plan, forget the origins of the Marshall Plan, and talk about, and Mr. Tedesse, let me just talk about a very simple relationship. I just actually got a very nice message from the United States International Development Finance Corporation. I mean, we have already engagements with them. From that perspective, if they have $60 billion sitting right there that they would like to engage with the rest of the world, what would it take for entities like African countries to actually tap into those resources? So instead of having a Marshall Aid Plan, we have more aid for trade, so to speak, aid for investment sort of regime.
Without saying too much, all I can just say is that we're excited that the Development Finance Corporation of the U.S. has come to the party. We are actually in very active discussions, and we look forward to working closely with them in the same way we have been with the Europeans, and of course the Chinese in a big way too. The Japanese have come recently as well. So I think the message really is, you know, we have built a much more attractive value proposition as Africans. The reason the world wants to come to us, not with just aid, but now with investment, is because there is a certain amount of clarity that there is a future in Africa. And I think that clarity, of course, is not picture perfect, but there is enough clarity to attract players to come to Africa in a way that wasn't the case 15 years ago, 10 years ago. And I think we assume that the whole world knows this, but that's not the case. When I go on my road shows to issue bonds, I often discover that institutional investors don't really have an appreciation for the transformation that's been going on. So, you know, really in the end, it's all about confidence, right? The perception issue is everything. If you look at the story of the East Asian miracle, it was not a Marshall Plan driven success story. It was driven by a different type of capital. A lot of it was Chinese capital, not necessarily coming from China. It came from different parts of East Asia, but it was all return-seeking capital, and it had the impact. So it doesn't have to come from an NGO, as Nagatu was saying. I think you know, productive and efficient capital can produce huge impact. And I think for Africans, we need to be very, very clear-minded as to what the 21st century offers by way of opportunity. You know, the Marshall Plan probably won't happen twice, you know. I don't think the East Asian miracle applies to Africa. So the question is, how do we take advantage of the 21st century to get more capital to flow? And maybe the AFCFTA is one answer to it. But the other answer to it is to show the world that African capital itself is serious about making Africa work for good investments. And that's why I've always gone around the world talking about the success I've had with African investors in my bank, as opposed to trying to tell the story of me looking, you know, for capital coming from far away in the US or in Scandinavia to come into a bank where Africans themselves are not confident with. And that's why, from a good story point of view, I reach out to my friend, Minister Amadou, and I tell him, you know what? I may have not been born in West Africa, but I love the story of Senegal, and I would love Senegal to join the bank. And I'm hoping that Senegal will join in, so when I go to Europe, I can talk about the success story of Senegal as well as Rwanda and Mauritius.
You know, I'm sorry, Mr. Tedesse, you cannot plug the bank as much as you can. But on the other hand, I have no choice but to talk about this from two very simple aspects. From everything that we've heard on this panel, what is such a good feeling is that we're not going out to the world with our hat in our hand saying, you know, guys, please come and invest in us. We're basically saying there are significant opportunities in the region and the continent. And Louise, this for me is very personal. It is the fact that even a country like Rwanda, which less than 20 years ago was going through a massive governance, economic and investment potential. But what the government did is that it undertook significant reform. From that perspective, Louise, I would like to just almost come back and ask how, and moving away from the Marshall Aid Plan, how are we going to attract the next generation of capital? And not just capital, but next generation of infrastructural development, which of course is going to go into capital. But the essence of that is that if Rwanda has achieved so much thus far, how are you going to craft the same thing? And then comes the key part of my message. How do we signal the rest of the region? How do we signal the rest of Africa to almost emulate Rwanda's example?
Thanks, Dennis. And maybe just picking up on something that the president just said is, it's at least one of the good signals for us in Rwanda is that if you look last year, over 60% of investments coming into Rwanda were from the rest of Africa. So it is happening. I think we probably need to amplify this, this messaging more. But I think business between Africa, is really starting to go on the rise. Now, in terms of, to your question, Dennis, what is really the next frontier? How do we get there? I think, one of the most important things for Africa and for countries like Rwanda, the starting point is knowing exactly what it is that you want, and knowing how you're going to position yourself to get there. So for Rwanda, one of the things that we're transitioning to, which really is coming out of the experience that we've had over the last several years, where our focus was really, building the right fundamentals, is now going to the next level where we're really increasing our capability and our knowledge in terms of very sector specific approaches to investment. So at RDB, we've over the last maybe 2 or 3 years, we've significantly enhanced our capacity as an investment board to be able to engage with an investor who, like, Mr. Negatu was saying, thinks Africa is a country, doesn't know the different dynamics, doesn't know the different, pockets of success that are on the continent, for instance. And talking to such investors at a place where we're able to present them with very business and sector specific information on what are the opportunities in Rwanda, but clearly, what is the business opportunity for you here? What is the potential for return for you here? That obviously involves us, requires us to have very deep sector knowledge. It requires us to be able to enhance our data capabilities. It requires us to be able to speak investor language and be very proactive in reaching out to them. I think several times we sort of assume that we'll sit back, and this capital will come to us. We have to seek it out, but we have to seek it out very well prepared. We have to know exactly what we're pitching. We have to understand the business opportunity. Nobody's going to do that for us. And so as African countries, we need to be able to develop those capabilities. For RDB, I believe it really has been a game changer for us, really taking this proactive, targeted, but also very, deep subject matter knowledge in terms of engaging with investors, but also having the flexibility, to co-create some of these opportunities. As we speak to investors, we're very keen to hear from them, as I said. If what we're pitching as opportunities and if what we're looking at as a business angle does not really resonate with an investor, we're not afraid to ask the question, what would it take for you to invest in this particular space? What is it about the opportunity that we're pitching that doesn't make sense? Or how could it even be better improved, right? Because this is someone that has decided, for instance, I'm not going to invest in Rwanda, maybe not now, maybe in 10 years, but we still push to understand what is it that you what would it take for you to invest in Rwanda? And we take that information and we're constantly refining, and readapting our investment propositions and our investment opportunities that we're pitching to investors. So we really have to come from a very generic and sort of laid back way of looking at investment or thinking that, capital is going to come from other sources and that not private, and start to be very proactive in understanding where the capital is, but then being able to engage them with a clear understanding of the opportunity and what we want as Africans, and we have to invest in building that knowledge and that capability. We've seen people that had absolutely no intention to invest in Rwanda, but because we've proactively targeted them, we've done the homework, we're prepared, we are pitching to them exactly what the opportunity is and what it means to the investor. They take a second look and say, okay, I wasn't thinking Rwanda wasn't on my radar, but perhaps, you know, this is something I'm going to look at. Obviously, going very hand in hand with that is something that I really wanted to touch on earlier, which is being extremely intentional, and you all touched on it, being extremely intentional in building the narrative. You know, as Rwanda, no one would know about a small, you know, Central African or East African state in the middle of Africa, but we've been very deliberate in crafting the story of Rwanda, the journey of transformation that we've been through. We've looked to what, you know, where the sources of information investors go to, and we are very proactively, you know, pitching our story in those spaces. So there has to be a very intentional, you know, aspect to both your investment approach, but also, you know, your communication to investors as to what you offer as an economic, you know, destination. So
okay, sorry, Louise, just give me a second. Talking about deliberate aspects, you now have major competition. You have the Minister of Economy, Planning and Cooperation from Senegal. Honorable Hort is on the phone. We're going to fine you, sir, a bit of money because you came about 1 hour late. It will take about 0.04% of your GDP as money. We want it in a brown envelope. But from that perspective, Louise, I'm going to really come back to you, and I really apologize for cutting you short. I just wanted to introduce somebody who in 2012 was named a young global leader by the World Economic Forum. This is 2012. In 2020, less than 8 years later, he is the Minister of Economy, Planning and Cooperation in Senegal. Senegal is the pathway to Africa. Interestingly, Senegal and Rwanda have something in common. They have a major plan that they are leveraging to go to the next level. And Louise, just so you know, Senegal's plan is agile, it is adaptable, and it is also resilient. They are also doing so many successful things with COVID-19. Mr. Amadou Hort, it is such a pleasure to see you again. We would like to ask a quick question to you to come in touch with everybody else. Your friend Tadesse, Admasu Tadesse from the Trade and Development Bank, has basically talked some of the elements of Senegal, some of the projects of Senegal. We also spoke to your office 2 days ago. We were talking about some of the amazing projects that you have. But I have a question for you. What signal do you have to the rest of the world in terms of investing in our countries, in our region, in our continent? Over to you, sir, and welcome.
Thank you very much, Dennis, and apologies for being late. I was in a major meeting trying to take advantage of the post-COVID, trying to refocus, to reshape our priorities. Good to see Tadesse and Negatu, familiar faces. Nice to meet Maggie also and Luis. Because of this COVID-19, we've seen a lot of disruption in terms of having access to health, having access to pharmaceutical product, having even sometimes access to food that used to be imported. And because of all of that, we've decided to reshape our plans, refocus our plans to address food security, to address basically healthcare and pharmaceuticals, to address as well social support to the most vulnerable people in the country, to try to address also industrialization. And that is why we have decided also to do this by having the government invest, but more importantly, having the private sector invest. In our initial plan, the private sector contributions should have been only 22%. And now, because of the COVID-19, we have reviewed our plans, and we want the private sector to contribute 40% of our plan. The plan is about 23 billion euros over the next, basically over the next 3 years. And the focus, as I said, the health sector. But in the health sector, we are also doing reforms so that we can attract more private sector. For example, in Senegal, to build a clinic and be the owner of a clinic, you have to be a doctor. It has to change. You and I, if we have some money, we want to invest in a clinic and be the majority shareholder, nothing should stop us from doing it and hiring the doctors to do the work, right? On the pharmaceutical side, to invest in an industrial, pharmaceutical industry, you cannot be the controlling shareholder if you're not a group of or pharmacists. And that has to change. If you manufacture a new pharmaceutical product, it takes you months, sometimes even years, to get the approval to sell, while you have already done actually the investment. So all of that needs to be transformed and changed. We're still importing a lot of rice. It has to stop. We cannot keep importing because we nearly actually basically got into trouble because I think India or Thailand were thinking about regulating the exportation of rice during COVID-19. We said we have to accelerate our plans so that we don't import rice anymore. It will take another 3 years, but we are investing heavily into being self-sufficient in terms of food security. We were building agropoles to transform some of our agricultural products. We had a big project approved by the African Development Bank and the Islamic Development Bank, with the private sector needing to contribute about $200 million into that project. We are fast-tracking the implementation of that project under the leadership of our Sovereign Wealth Fund, which is FONSIS, and we'll build 3 or 4 more of those. But in the health sector, I have to stop 1 second to say that some of the reform that we are doing is to see how government can work with the private sector to build new hospitals, even to maybe have parts of the hospital being managed by the private sector. Our hospitals we're doing very well. You've seen during the COVID, Senegal had a very good response, very good planning. The president took big decisions. That's why we came in by foreign policy ranking #1 in terms of the response, how we manage the COVID-19 process. We started with having too many sick patients. Today we are around 30, 40 cases per day. At some point we were more than 150, 160 per day. The number of people being discharged is maybe 2, 3 times the number of people getting sick now. Some centers that we have built very quickly across the country for COVID treatment, we are closing them down now because we don't have enough patients to put into those centers. But we need to do the reforms on the health sector to make sure that our hospitals are more efficient, that we have private sector money into hospitals. We are discussing PPPs with some local and international investors, and we are hoping by the time we finish structuring all those projects that we will be officially a member of TDB as well, so that TDB can actually contribute to the financing. Unless Tadesse can give us an exception and say, you know, we'll invest and later you will get it. So hopefully, you know, why not? But we will try also to fast track our process to be part of TDB, the same way we are part of other international development financial institutions. And TDB is very efficient, very quick, you know, and I'm sorry to say I have to poach one of your guys to make him appointee in the ECOWAS Bank. It's Dr. Mabuba Diagne. I know he's done a great job at TDB, but we needed somebody also that had a great experience. So we are fortunate that that he left in a very good conditions and to become the vice president at ECOWAS Bank. But we really need to find, yeah, we are looking forward anyway to working with TDB to fast tracking the process of becoming a member. You know, with COVID-19, things will slow down a bit. The parliament will be in recess again in October. So we are hoping that, you know, by end of the year, we will really finalize everything so that we become an official member of TDB. Thank you very much.
Mr. Tadese, you have my permission to plug the bank.
Wanted to tell Amadou we can start the due diligence in advance of the deal.
Wonderful, wonderful, wonderful. We can do that. We can do that. Fantastic.
This is such a great part. I just wanted to apologize to Louise again. I want to just bring Louise again. You had mentioned something about the overall essence of the country and how we can actually move the infrastructure. Louise, again, 1,000 apologies. If you would like, I would like for you to engage with your colleague, the minister from Senegal. If not, I'd like to just gently pivot the conversation to what Honorable Amadou Hott and Mr. Tadesse were talking about right now, the essence of African institutions investing and the essence of African governments doing business with institutions. From that perspective, Mr. Tadesse, if you were to speak to your colleague, Honorable Hott, in terms of messaging to the world, what message would you give the world vis-a-vis bringing in Senegal into the bank? Because for me, this is a case of the AFCFTA and regional integration working. Over to you, sir.
Well, the first thing I would want to do is maybe tell the world that whoever comes to Rwanda to invest, there is a bank that is ready and willing to provide medium to long-term finance to support private sector investments in a promising and high-performing economy such as Senegal. And I think this really builds on what Louise was saying, because when you go out to attract investors, investors also want to know who else will be sharing risk, what kinds of long-term partners would be available to work in an economy like that. And there's quite a few out there, of course, as Amadou has mentioned, where there's quite a few institutions like us, but we are very private sector orientated. The private sector likes us because we tend to be very cognizant of the value of time, right? So time is money, and this is something that is not always understood. People are sometimes more interested in getting a quick decision and quick facilities rather than getting very cheap facilities, but that come 2 years down the line. So I think this is what the private sector wants to hear, whether it's Rwanda, Senegal, Uganda, or any other country that really, investors typically come in and want to have leverage. No investor typically comes in and puts 100% of their equity into any deal. And any smart investor typically wants a bank from the neighborhood that knows the neighborhood, that could actually be part of a smart group of investors who can actually not just, complete the circle in terms of raising the capital that's required, but having partners who can actually help investors when the going gets tough. Because, the truth about investment is it's not always smooth sailing. Things do go wrong. And typically investors like it when there's African capital in the mix, because they know that African capital is very aware of the realities on the ground, right? So this is what we believe we can offer. And I think it also helps investors to know that I have pension funds who are actually shareholders of the bank. We're not just public sector money. We're not just government taxpayer money. And we actually work with the pension fund of Mauritius, of Rwanda, of Uganda, and maybe the sovereign wealth fund of Senegal. And so, when the rest of the world sees that African capital is working across borders in a smart way and taking risk on other African economies, it actually helps build up that confidence, right? Because it's all about inspiration and getting people to move away from the perceptions that Zamadina highlighted at the beginning. It's all about giving people confidence. And sometimes it really makes a much bigger difference when the people from the neighborhood are doing it first, right? So for the Americans, I should just highlight that I got a beautiful letter from an American investor just 2 days ago that had concluded a very important project development exercise, the riskiest part in any kind of investment in an African country is building an oil refinery for the first time in their history. You're talking about a $3 billion investment, and it's an American investor for the first time coming into this kind of investment. And it's TDB, of course, that worked with this American entrepreneur at the very early stages of the deal. So this would be the kind of project that we would use American capital that we raise to help complete the circle.
I just wanted to bring in Mr. Nagatu. You know, right now, Minister Hart and Mr. Tabese seem to have struck a deal. Can we get you and Louise to strike some sort of deal? In other words, how do we get more capital from the United States into Rwanda, which is basically going to get into Eastern and Southern Africa?
So I should confess, I'm a big fan of Rwanda for a number of reasons, obviously, which everybody talks about, but I was honored enough, had the pleasure of leading a team about 5 years ago, to help transform Rwanda Air, at least develop the strategy for Rwanda Air. And during that time, we saw the focus the leadership has. The message actually from the top down all the way is consistent. And the ability of the civil servant, which very rarely do you see that level of capacity in Africa, was amazing. So it's not a surprise that Rwanda is getting a lot of attention and results. What I'm suggesting here is, and to answer to your question in a circular way, is can we scale up in Africa the success of the likes of Rwanda into the bigger economies? And there's a reason I say that. Earlier we talked about perception, why American money is really not flowing into Africa. I mean, I should caveat that a little bit. The United States used to be the largest investor in Africa. It's no longer the case. I mean, we know who it is. It starts with a C, right? So it's been gradually minimalized. It's compared to the size of the American economy, which is $22 trillion. Even if the U.S. was the number one investor in Africa, it would still be very small. So I would suggest we scale up, look at the best practice. People say, well, Rwanda is a small country. Maybe that's why it was successful. No, they were focused. They had the leadership. They had the capacity to execute. So when you look up, and if you open your Bloomberg terminal like we do and other investors do before, when I don't need to do that, but let's say the American sitting in New York who has never been to Africa, or someone in the UK, or where these monies are deployed, has never set foot on Africa. The Africa economic headlines usually are dominated by whom? South Africa, Nigeria. And guess what? They're both heavily underperforming. Their underperformance translates into the image of the whole continent and the successes of the Rwanda, or even Ethiopia, which was the fastest growing economy for 10 years in a row. In fact, for the whole 2000s, it was the fastest growing economy in Africa. Those kinds of successes get drowned out because people say, well, South Africa is, growing at 1 point. And by the way, we need to distinguish between pre-COVID, COVID, and post-COVID. So but let's just take January of this year, which seems like a long time ago, but that was the market. Then that's what these investors see. South Africa, oh my God, it's growing at 0.5%. Or Nigeria, the same thing. And then it drowns out the rest. So that's one thing we need to try to, if we look at Asia, the rise of China helped rise the rest of Southeast Asia and the rest of the world. We don't have those kinds of anchor economies that could uplift that. So we focus on those who can help transform the region. South Africa develops, the whole of SADC will do well. There's no question about it. If Nigeria develops, all of West Africa will do well, just by the pull of the size of their weight. So that one thing I would say is when we talk about rebranding. By the way, Americans have very short attention span. It's a huge continent. So sometimes they say, why bother with the rest of the world? And unfortunately, we have a person sitting in the White House who thinks like that and leads to thinking, okay, we have only another month and a half before he's whatever. I don't want to get into trouble here, but I'm just saying, aside from that unique event that we have from the White House leadership, I think the messaging from Africa has been curated by Africans, narrated by Africans on shows like this and others, where we tell our stories, not let third parties tell our stories. And that, I think, is a big, big challenge. So I wanted to mention, though, something related to the American event, because I'm in Washington, so I'm talking about the American investment. The US DFC, that's been set up, and I complimented the Trump administration for setting it up. Fine. I mean, I think they took the initiative. They should get credit. But guess what? It's $60 billion. What is $60 billion for the United States? Nothing. I compare that to the Belt and Road Initiative, which is in the trillions. So even if the intention was to counter the Chinese, which the US government denies, but if it's to counter the Chinese, what is $60 billion? Nothing. So we need to scale up, okay, from the US government perspective. And this is a message I send every time I participate. Recently, we had a discussion like this, and somebody says, "Zamanina, what are you talking about? Why should we engage Africa even more? Because our total trade with Africa is less than 1% of America's total trade. That's very myopic. So we need to change those kinds of views by showing success stories, especially in the bigger countries, but also using the likes of really successful countries like Rwanda that Africa can do. Final point, because we need to talk about Africa can do it. Let's look at COVID. Africa, we can come up with all kinds of reasons why it's doing much better here. Almost Africa. Yes, the numbers are growing and all that. So that means there are certain things we've learned we have been able to address in Africa, which we can translate into the image branding of Africa. So this is just some key points I wanted to share with you.
Louise, I'm going to beg if you could summarize in 30 seconds or so, because you have Mr. Negatu talking about your country. We have almost everybody talking about your country. Could you summarize in 30 seconds how you can encapsulate the opportunity Rwanda presents to the world, so we can then move to Mr. Tadesse for 30 seconds and end with Honorable Minister Hort. Over to you, Louise.
Thank you very much, Dennis. I think one of the things that I really wanted to come out clearly is that where we see Rwanda today is not something that has happened overnight. I really do not want to to give that impression, and I think it's very important for people and the rest of Africa to understand just the grit, the hard work, the consistency that it does take. As I said, this is something that you have to map out your vision. You said it very clearly. Once you map out that vision, make sure it trickles through. Then the hard work that differentiates is following through on that, and that means getting up every day, with the same language, the same purpose, and knowing that it will not work itself out. You have to put in the work, and also to the points that we were just talking about. We really are always looking to how we can scale success. As Rwanda, we've modeled on countries like Singapore and so on. But very important to temper that with a bit of caution, which is that once you do identify the model of transformation that you think will resonate with your aspirations, always understand the unique circumstances, the unique context within which your economy, and your vision are operating, and make sure that you then bring these lessons in to advance that. So, in a nutshell, Dennis, I hope that works.
So let me just, while we're talking about that, to use the word grit, Mr. Tadesse, let's talk about the grit element. To almost summarize this aspect, you have 30 seconds to almost close this and actually pass a message to Minister Hort.
Just very briefly, I think for the non-Africans who may not know the story, I think we've made a lot of mistakes in Africa over the past 50, 60 years since independence. But as any entrepreneur knows, any investor knows, if you make a lot of mistakes quickly and get them out of the way, it paves your way for actual success. So I think Africa has gotten over that hump, and there is a lot of opportunity ahead. We are on the cusp of a historic economic shift happening in terms of our growth story. It's not so different from what happened in East Asia 30 years ago. So we've already seen the breakout happening in many sectors. We're seeing double-digit profit growth year on year. There's a very strong story already. It's just that I think people have to pay attention and realize the opportunity.
What's interesting is that before you became the Minister of Economics and Planning in Senegal, Honorable Hort, you also manage the sovereign fund of this country. I asked the other panelists this same question. What would you say to your friends, your partners, your former classmates in the schools in New York, in the schools in France, or wherever you went? What message do you give them, not just about Senegal, but about the region and the continent?
Yeah, thank you very much. I mean, just to say that, you know, while I was at the Sovereign Wealth Fund, one key thing that I've learned is that to fast track projects in Africa, having the human capacity, the people that walk the private sector walk and private sector talk within government or within an entity that is very close to government is of paramount importance, because that will allow you to strike fair deals and strike them fast enough to make sure that the credibility of the country is at the highest vis-a-vis the investors, the international investors. At the same time, while I was also at the African Development Bank as the Vice President for Energy, what I've noticed also was that the countries that had that same capacity, those countries managed to execute transactions, whether with the private sector or even public sector transactions, faster than countries that did not have the capacity. That's why the success of Rwanda, in addition to the leadership, is really the quality also of the people, really in government, but also in state-owned entities and what have you. I've seen in Rwanda people from other nationalities being hired at top positions in Rwanda to help the government, within the government. In other African countries, you have to have the nationality of that country to be a CEO or a director or something like that. That's why we need to make sure that we are attracting talent inside government. This is what I'm trying to do also when I was hired appointed as the minister. The first thing I did was to raise a fund, a grant money to hire talent and attract them into the ministry. Former bankers and what have you, engineers that join to help us fast track the transactions. And to lastly, to international investors, former classmates and others, you know, I'm not going to say it is the time for Africa. It has always been the time for Africa. You know, if they don't come and really see Africa in a different way, they're the one losing, because we are not waiting for them to come. We are talking to investors from around the world, whether it's in Asia or within Africa. We are reforming so that we can attract more investors, and the returns are much better than whatever they can find anywhere else. So if they don't come, they're the one actually losing. We are not running after, you know, chasing investors, you know, because the investors are here. What we are trying to do is to make the projects ready. For us, it's the biggest challenge. The biggest challenge is not to go get the investors. The biggest challenge of Africa is to prepare projects, spend money in project preparation so that we can show projects that have all the studies, all the feasibility studies, the bankability studies, the capital structure, the IRR is clear, how much we're looking for from the investor, who's providing the debt, like TDB and others. So we need to just focus on making our projects ready. Then we will, the investors, they're knocking at our doors anyway already, but we have to be ready on our side. This is what Senegal is doing, this is what Rwanda is doing, Morocco is doing, and other countries are doing that. Thank you.
You know, that would have served as the ending statement, but I would like to give this panel just another 2 minutes. And I say this because there's something that I've taken away from this panel. I really appreciate that the panelists actually watched the panel before, which is there is a direct relationship between the African Continental Free Trade Agreement and area and investment. There is something that Mr. Negato talked about, the perception, the packaging. There's something that Mr. Tadesse talked about, which is the communication. Can we communicate the opportunities? And then there's something that Mr. Hodge you've talked about, which is the talent. And if I go back to the panel before, the former president of Mauritius kept talking about capacity, capacity, capacity. And now we talk about packaging, 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 relate that to communication. I just wanted to say that if any panelist has a way to encapsulate this overall movement away from the message, can we put those three things together. And here I'd like to give the opportunity to Mr. Honorable Hort again. I really want to bring up this thing of the relationship between AFCFTA, overall trade, overall investment, and overall entities. Is there any final message that we could provide the world? I know you've already mentioned it, but we really cannot emphasize this anymore. Thank you very much, sir.
Thank you very much. With CFTA, the opportunity becomes much, much bigger. But we cannot succeed with the CFTA if we don't trade with each other. We don't want just people to, send us things from overseas. You send to Senegal, then you can transport to another country because no barriers. What we want, if we want to capture the value, we need to produce and transform locally. And you cannot do that if you don't have the right reforms, you don't have the right talent, and if you cannot prepare projects. If, for example, I want to build drugs here, medicines, to sell it to Nigeria, and it's just a wishful thinking. I don't have feasibility studies. I don't have anything to show to a potential investor. It will be just a list of projects and wishes to do something, but it will never happen. We've seen that. And within governments also across Africa, we have to spend money on preparing projects and reforming. Money put into project preparation, for example, into, let's say, reforming your economy, reforming your rules, reforming your private sector processes and all of that is not a wasted money. Money into having a clear strategy is not wasted. It's as important as taking money and building a new hospital. So we have to make sure that we have those so that we can manufacture, we can execute projects. Being able to execute is very important. That's the biggest challenge, I think, in Africa. We are struggling sometimes to execute because we are not prepared enough.
Panelists, I was taught by my parents never to speak after wise people have spoken. And please forgive me for actually coming up with this. This panel here has been a significant highlight to these overall discussions. I've seen my friend Louise again after a very long time. I've gone back to the things that used to excite me about reading the Ernst & Young report on Africa. My boss is on the phone. I'm on the call. For me, that is great. And then, of course, we have Minister Amadou, who has basically encapsulated some of the elements. I only have something to say. I want to thank the organizers for the opportunity to engage in this conversation. My hope is that it becomes a packaged product for us to show the world that we are not coming to beg. We are basically saying, and to borrow Mr. Negatu's words, we are coming to present you with an opportunity. To borrow Mr. Tadese's words, we are going to give you better returns than many parts of the world. To borrow Louise's words, we are agile, we are adaptable, we are resilient, and of course, we have grit. And lastly, to Honorable Amadou for basically showing us that countries like Senegal, progressive countries, can actually lead the way, come to panels like this to talk about their opportunities. Panel, thank you so much. May God bless you and keep away from COVID. Thank you.
Thank you, Dennis.
Thank you very much.
Thank you.
Thank you very much.
Thank you so much, Dennis. Honorable Minister Amadou Hort, thanks a lot for joining us, regardless of the time. We appreciate that. Mr. Zimedine, thanks a lot for making time. Dennis, thanks for this amazing conversation. Mr. Tadesse and Louise, again, thanks for joining us on this particular session. We've had such an amazing time. It's been so insightful. There's so much we have learned from the case studies of Senegal and Rwanda. And I am so glad that Mr. Tadesse and Honorable Minister Amadou have something cooking up. For me, it makes me so happy that
we want our money. We want our money. Our money in a brown envelope, please. French francs or dollars we will take.
I just need a commission though. I have to say that. Nevertheless,
Thank
thanks
you.
again, distinguished guests, for joining us on this inaugural State of Africa 2020 Summit. There's so much we have coming up, and next we'll have the aviation panel. But for now, we have something we have prepared for the attendees and as we add other panelists, and say bye to you. Thanks a lot.
Thank you.